What's going on, fellow grinders? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Tonight's video, I'm talking about the market in general with three coins: Bitcoin, Ethereum, and Matic, and why the market's on the precipice of a huge move, and also why I'm more cautious than optimistic. Stay tuned, guys. There's a ton to go over. All right, everybody, we know the drill. I'm not a financial advisor. This is not financial advice. I share technical analysis. You use it as you see fit. But remember, you manage your own money and you manage your own risk. If you like this video, please hit the like button, subscribe to the channel, all that good stuff. If you want to follow me on Twitter at MarkTheDGT, go ahead. We're going to hop into Bitcoin first, and we're on a daily chart. And I drew this up, and I want to show you all the particular rejections off of the trend line. So from the top, we started a trend down. And the first time we touched that trend line, we rejected 24%. The second time we got close to it, we didn't quite touch it, we rejected 24% again. Then we went sideways in this channel, and this was from middle of March to the beginning of April. We had this little relief rally, got up about 30% up. And this was a little relief rally. This is the first relief that we had, and then we dumped again. The first rejection of the new trend line rejected 32%. The second and most recent was on the 8th of June, and that rejected down 43%. Now, what do? We went into a sideways channel, just like we did here, and we just barely broke out the top. Now we're coming close to that trend line again. Do we break the trend or do we reject? My money is going to be on reject. I'm looking for a short position to enter here. And honestly, I've already entered a short position just based on the fact that we had this long wick shooting star rejection candle, and that was enough for me to say I'm entering a short here. I believe that was the top. We had a long wick down top. Typically when you have that, it's a good reversal pattern. It's a good reversal candle. So I went ahead and shorted already with my stop loss big enough so that with light leverage, that if the trend line does get touched in the next day or two, if it does have a nice pump up, it's not going to knock me out of the trade. I still believe if it does come up to 24K again, it'll hit the trend line and reject off very hard. Now we're going to take a look at Ethereum, and Ethereum is another big player. And again, same scenario, very similar. Rejected 45% from this first trend line touch. Came back, rejected 31%, came back, rejected 21%. That would have been a hell of a trade if we would have got both of those. You get a rejection down, touches again, rejected again. Would have been great. You would have got stop loss if you tried to get this one, but you know, it happens. You win 2 out of 3, it's not bad. Barely broke out the top, started a new trend line down. First rejection, rejected 69% because that's the last time we even got close to the trend line. Now, again, we have come near to a new top, potentially a new top. I'm thinking that it's already topped out here because we've got kind of this weird sideways going. It kind of doesn't know what it wants to do, and I think it's going to drop. I think it's going to run to the downside. So I have taken a short position, and on Ethereum, I've got my stop loss at 1660, slightly higher than the highest wick of this candle on the 19th. There's a potential I could get stopped on Ethereum because it could get back to this trend line, but I don't think it does. The other big player on Ethereum right now is that there is a massive bearish or hidden bearish divergence formed. So from the last time it peaked, or the last time I touched the trend line here, down to this peak, the RSI is in a huge divergence, and this is called a hidden bearish because the price came down, the peak was lower, but the RSI was higher. So that was a huge hidden divergence. And that typically means that the price will go back down at least to the lowest low of the previous bottom, which would be around here, around $930 some. I mean, I think it bottomed out entirely on the futures market as low as 878, but I go to that support resistance line where it ran off the next day and bottomed again at about 937. So that's what I'm looking at for Ethereum. Again, I think we've seen the biggest part of the run. I think the run is over. I think it's done. And I'm going to leave you with this question because we have to think about this pragmatically. Do we believe that with next week, the U.S. Federal Reserve potentially at least raising the rate 75 basis points, maybe 100 basis points, with earnings being substantially down for lots of companies, lots of bad earnings coming out for Q2, lots of bad revenue coming out for Q2. Global markets, the Canadian central bank went ahead and did a 100-point interest rate hike. Global economy is going down. China's they've got tanks in the streets stopping people from doing bank runs. There are so many countries that are having struggles right now with either bank runs or Sri Lanka just had they stormed their prime minister's castle or whatever it was. Like, things are going wild. Things are going wild. And with economies, do you really think that we're going to have a boom right now with everything going so crazy? If the answer is yes, then go ahead and do what you do. But I'm going to say I'm more cautious than optimistic, and I think we go down further. I think there's a lot more to go down, and I don't know that we go much lower than our bottom. We might not go much lower than what we've already established as a bottom, but we're not going to break this trend line yet. I think we're going to run it down until we go totally sideways through it, somewhere in the $900 to $1,200 range for Ethereum. And we're going to look at Matic, because Matic again is very similar. Matic first rejection, down 24%. Second rejection, it's the only other time it touched the trend line. The only other time Matic touched the trend line, it dropped 78%. Now we think this is going to break out entirely. It got back to the trend line, and it has rejected 3 times. It got up on the 18th with a massive, massive candle, 27% up on that day, and wicked down. The next day, wicked back up and fell. The next day, wicked back up, fell. Had a green day up on the 21st and never quite got back to it. But look, the wicks are coming down with the trend line. It's not breaking through the trend line. I'm pretty certain that this is going to eventually just kind of fall off. It's going to have a trend reversal. Or not a trend reversal, it's going to have a price reversal. It's going to come back down to the downside and reject off of the trend. Another big hidden bearish divergence as well. So everything's telling me bearish. Everything's telling me this was a relief rally or a bull trap or whatever you want to call it, dead cat bounce, whatever you call this term. This was a relief rally because we haven't had one since March. There hasn't been a relief rally since March. So please don't get overly optimistic. Don't go all in. Don't do what any of these influencers are telling you to do. People are saying the bottom's already in. We're breaking out. Bitcoin's going back on the bull market or back on a bull run because Bitcoin is the future, and people were realizing it. People were buying Bitcoin, and no, it's not there yet. It's not there yet. That is the long-term outlook. Yes, it's not there yet. Don't go all in now, because if you go all in on Bitcoin now at 23, 24,000, you're going to be kicking yourself when it's back down to 17 or maybe even $15,000 before it's all said and done. So with that being said, guys, I hope you enjoyed this video. As always, until next time, peace.